In recent history, there has been a boom in demand for certain luxury watches from the likes of Rolex, Patek Philippe, and AP. So much so that having the money to buy is no longer all that is required in order to obtain a coveted watch. In a traditional circumstance, increased demand for a product usually creates better outcomes for the majority involved. But in the world of luxury watches, it's a bit more complicated than that. And as a result, it's created an unprecedented marketplace with both positive and negative effects. So in this video, I want to try to explain a bit more about what is currently happening with the demand of certain luxury watches, and at the end, talk about both the positive and negative implication for all those involved. So this is the Patek Philippe Nautilus reference 5711. Over the past 5 years, this watch has become one of, if not the most coveted watch in the world. The 5711 had a retail price that gradually increased basically yearly over the past 5 years. But those in the know understand that retail price doesn't tell the story, because you haven't been able to walk into any authorized dealer of Patek to get one, leading to secondary market prices that skyrocketed to more than double list value. But right at what appeared to be the height of demand, Patek did something that completely contradicts the law of supply and demand. They discontinued the blue 5711, making way for a new green dial variant, a variant that retails for $34,800, but in the summer of 2021, a rare double sealed example sold at auction for a whopping $376,000 or $470,000 when factoring in buyer fees, a number that even without those fees is 11 times the retail value. What is happening with secondary market premiums to many can be best described as insanity. But like that Nautilus example, people are voluntarily parting with their money in exchange for these highly demanded models. So why and how has this happened? In order to understand the different market dynamics within the world of luxury goods, I think it's important to address one of the cornerstones of economics first: supply and demand. In a typical market that can be deemed healthy, supply and demand should be in a constant exchange, establishing pricing equilibrium. However, this quest for equilibrium is rarely sustained since supply and demand is a fluid idea, as there are many factors that will impact the market. Simply put, if there is an influx of supply that overshoots demand, products will sit, causing prices to go down so products can sell at a healthy frequency. With the inverse, if supply slows down, prices tend to go up a reasonable degree since consumers are willing to pay more since there is not as much to go around. And in a market where there is a return to be made, producers typically are going to rush to make more of that product or will raise the price to an appropriate degree to continue to move products and increase their return. This is how general products or commodities experience supply and demand. But in the field of luxury, it's a bit more complex. Although selling as many products as possible and maximizing profit is a key element of every business, top luxury brands care about one element just as much, and that is maintaining exclusivity. Luxury brands like Patek Philippe, or in another product category like Hermes with their bags, protect their image as luxury when they can make their products exude craftsmanship, exclusivity, and prestige. If you get to the core why most people buy luxury products, sure, there is appreciation of the high quality craftsmanship, but at the end of the day, a huge draw for luxury products to many is to show off and to have a product that not just anyone can have. And although the hype culture perpetuated by social media has contributed to this idea, this concept is not anything new. In the late 19th century, there was an American economist named Thorstein Veblen who began analyzing the spending habits of high earners during the Industrial Revolution. This time from 1870 to 1900 is commonly referred to as the Gilded Age, given the rapid surge of economic growth in the United States. By looking at the surging consumerism during the period and elevated focus of class structure, he coined a term known as conspicuous consumption. Conspicuous consumption refers to the expenditure on or consumption of luxuries on a lavish scale in an attempt to enhance one's prestige. As a byproduct of the consumption of luxury goods as a way to achieve status, there was an interesting phenomenon examined with these goods that contradicted the regular rules of supply and demand. Unlike typical goods, there were particular luxury products that saw an increase in demand as the price went up, as their appeal to consumers was not value, but being symbols of status, With the higher prices, these products were deemed more desirable since the money required to own one only heightened. The term used to describe these products is Veblen goods. Although instances of Veblen goods are incredibly rare, some of the leading examples in a modern context are with luxury watches from brands such as Patek Philippe, Rolex, and Audemars Piguet. These three brands are the best examples of maintaining exclusivity in the world of watches, and one of the leading reasons why they are the best at it is that they are privately owned. Identifying the reason for the rise in demand for specific luxury watches is difficult because it can't truly be attributed to just one factor, but having a pulse on demand and maintaining gradual and thoughtful growth is crucial. The world of luxury goods is operated mostly by a few conglomerates, such as LVMH, the largest luxury group in the world that operates brands such as Louis Vuitton, Hennessy, and Dior; Richemont, a brand that owns Cartier, Montblanc, and several prestigious watch manufacturers; and the Swatch Group, owners of a wide portfolio of watch brands from Tissot, Omega, up to Breguet. There are more, but you get the idea. The common trait for all of these conglomerates is that they are publicly traded companies with shareholders and are driven by reporting the highest quarterly earnings they can to increase their stock price. With brands being incentivized in the shorter term to increase earnings, producing and selling more product is going to be encouraged. This idea of creating more products does result in higher sales, but also, given the way brands sell through primarily brick and mortar retailers, the sale is recorded when the retailer makes an order instead of when the product actually hits the end consumer's hands. This, as a result, can lead to overproduction where products are being made more than the market requires them, causing a downturn in demand. This process of overproduction works as good as repellent on the types of consumers that desire to own the most exclusive products. If they are easier to get, they simply don't want them. This is even more sensitive in the watch category compared to other luxury segments, since the market cap for luxury watches is much smaller than that of apparel or handbags, for example. Now let's take a closer look back at the three brands mentioned: AP, Rolex, and Patek Philippe. Before advancing any further, it is important to note that the current demand for these products also is a byproduct of their attention to quality, their iconic designs, and the way that they operated the last century. That last point about operation is important because, given their private operation, instead of looking for short-term returns, these brands have the ability to operate with a rare level of autonomy in the luxury space. When short-term profit is not the only concern, these brands can focus on their most coveted attribute, their long-term perception of being seen as a prestigious brand in the market. This prudent approach with a leading product is the base for the current demand, but there was much more involved in this growing snowball. Although the brands certainly have an impact on what has happened, a lot is also contributed through a perfect storm of hype created by things outside of their control. In my opinion, I believe there are four primary factors that have created these empty displays at ADs and secondary market premiums. First, social media has created a completely different landscape for watches. The ability to learn, buy, and sell online has ushered in a level of convenience and access that previously was not possible. Also, looking back to Veblen and his theory, there has certainly been a rise in conspicuous consumption in a modern context, since showing off your new toy is not only limited to those in your local circle, but an online circle that can reach every corner of the globe. With an increase in the flexing lifestyle, the biggest and most expensive is what gets clicks, and those clicks, for some, are as good as any currency. Secondly, the surge of vintage and the obsession with steel sports watches. With the crazy auction results such as the Rolex Paul Newman Daytona, celebrities speaking favorably about references from some of the top brands, and a general boom for 20th century vintage Rolex in general, it has created a shift in what people wanted. With talk of sports watches and the world getting more casual with attire, many started to look at sports watches more than in years prior. In addition, watches have become more of a global playing field than ever before, with markets growing rapidly for this type of good, especially in places like Asia. This surge to a singular style and growing markets has changed the playing field completely. Number three, the flipping culture and those making money. As soon as there was a spike in demand, there was clearly not enough supply to go around, leading to opportunists who saw money to be made by buying as low as possible and then selling higher. This fueled the growth on two sides. It first captured the attention of those looking to make money in the secondary market, but also it brought in those lusting to show their status of owning the most exclusive of products. Both sides fueled one another. As the trading prices rose, so did the demand for the watches, as what you get with your watch was not just a well-made luxury good, but one that has become increasingly exclusive and a literal investment in rare circumstances, as much as I hate to say it. But for the final point, we have to look at a grip on the supply. Despite the increase in demand for brands like Rolex and Patek, they are not going to just increase their supply even if the market could support it. They're not going to do this for two reasons. One, it's not the easiest thing to scale production a sizable amount in a short period of time because we're talking about skilled artisans who are assembling these watches. But secondly, a rapid increase could have long-term consequences for the pricing and demand for their products. Brands like Rolex and Patek don't look at their organizations in a 5-year period or a decade period. They look at their positioning in century-long timeframes. With watches as a product category becoming less about function and more about craftsmanship, artistry, and status, brands of this ilk want to align themselves further with these ideas in order to have longevity in a market that will undoubtedly get smaller in the next 50 to 100 years. Now, there's a lot of lack of transparency when it comes to production, and nobody truly knows what is going on. But one thing is certain, you have to understand what is the priority and the positioning of these brands and why they operate, and what is their number one goal in the long term. All of these ideas combined have in turn created a cycle of continued uptick of demand. And with the drop of production as a result of the 2020 shutdowns, this only has added fuel to the fire. However, despite this appearing to be nothing but good for the brands, this actually has led to some negative implications as well. The most obvious downside of this is probably what people like you and me feel. It has become harder to get watches that you are interested in buying, as I truly love brands like Rolex, AP, and Patek. But this certainly hurts those who remember times before there was a surge in demand, where if you had the money to spend and showed face, it was much easier to become an owner of these watches. But times have changed, and instead of being able to walk out of an authorized dealer with a watch, you more often than not are needing to play games to show your worth and can be added to a wait list. In a way, these wait lists have a somewhat mystique around them and have only furthered the insatiable desire for some to own these watches. But on the other side, you have many consumers that are simply fed up with what is going on. I think most people in the market desiring luxury don't mind if there's a level of exclusivity and if the products they want are not the easiest to get. But there becomes a point when the trek to acquire can cannibalize the other elements of what a luxury experience should be. This has led many to look elsewhere, either at other brands or outside of watches altogether. And to be honest, I think some of the brands are probably content with this, as they are preferring to sell less units and then make their products more exclusive, which in turn will create more demand and raise prices. But that is putting a lot of faith in the current cultural zeitgeist. And I think that it's always important for both people and brands to remember what has gotten them into the position they are currently in. But as a second issue, it is one area that is not discussed as much, as there is another group that is currently in a tough position, and that is with authorized dealers. Now, I don't want to make ADs overly sympathetic characters, but the reality is the ones that are playing by the rules are in a tough position. Let's get back to the example at the beginning of that Patek Philippe Nautilus. Say you are an authorized dealer of Patek and you are allocated a Nautilus, a point that I might add doesn't really happen as often as most believe. And you now can sell that watch. So now you have one watch and a list of people inquiring that is at least a few hundred names long. Who do you choose? In addition, if you sell that watch, you will have to sell it at retail price. But as a retailer, you have to know in the back of your mind that the same watch you sold for $35,000 can now be flipped by that person you sold it to for a crazy return for multiples of their money. This puts both the retailer and the buyer in a tough position. And although I can't confirm how much this happens, there is no question that some authorized dealers sell directly to secondary market channels. But this can lead to quick termination of your authorized dealership by these brands. In fact, that double seal auction example at the beginning happened as a result of a retailer losing their AD of Patek and having nothing further to lose, so they maximize their profits on the way out. Why this is something that the brands need to think about is that they sell their watches through a large network of typically family-owned retailers across the globe. By frustrating the people that are on the ground selling your products, you create rifts in relationships that are usually decades long. Why this is even more important is that watch brands have been operating not as direct-to-consumer brands for the past century. They are B2B companies, recording sales when they sell to retailers, not the end consumer. If enough ADs or doors get frustrated, this can lead to some reworking of how these brands need to operate, an operation that is on a global scale. And if there's one thing that watch companies hate to do, that is to make quick strategic decisions. The truth is, this is much more complicated of an idea than what many people make it out to be. There's not just one sole thing that's responsible, and this has spiraled mostly as society has changed. I believe if you ask someone to define the term luxuries or luxury goods, you would get a variety of responses. But here is a formal definition: an inessential, desirable item which is expensive or difficult to obtain. To me, there are two parts of this definition that stand out. The first being expensive. This has always been an aspect of luxury goods, as the exclusivity and scarcity was dictated by the barrier of entry of price. However, what is happening here is that being expensive is no longer sufficient in giving people the dopamine high of owning something exclusive. We need another layer. So by adding an extra hurdle of extreme scarcity, it has only made these products in the eyes of consumers that much more enticing. But apart from a global change in human behavior and what people deem as luxury, where can brands go from here and where can we go from here? Now, despite my own preferences, the reality is I think brands see a bit of writing on the wall. They have two choices: spend the millions and millions of dollars in order to scale production, make more money while the market is peaked, but risk the long-term downsides of overproducing. From a business perspective, the short-term gain for a private company in luxury goods is not going to be worth the return, especially in the world of Swiss watches when exports are certainly going to go down over the next 10 to 20 to 30 years. There's just a lot of assumptions to be made here, but if there's one thing that I think will go a long way when thinking about the optics of how people see a company, I think transparency is going to be important. Now, these brands can't disclose everything that's going on, but even having statements about how they allocate pieces, what are the rules and how ADs operate, this all goes a long way and I think will help at least add a bit of favor in just the mindset towards some of the brands. Now, it's really easy from an outsider in of somebody that wants these products to just say, hey, just make more of them, because that gives what we want. But also on the other side, I think you have to consider what the goals of these brands are, and that is to maintain prestige. And I think this idea of transparency is important as you're kind of forging or maybe building up that next generation of consumers. You have an entire generation of people that are coming up and are gonna start to have discretionary income where they do not remember the time when luxury watches, or a watch I should say, was a needed tool for day-to-day life. They grew up with the smartphone, the Apple Watch. When they have discretionary income, they're going to look elsewhere to spend that money if the entire product category is going to neglect them, not only in telling a story about what their product means and where it sits in a current marketplace, but maybe you're just neglecting them altogether and making it difficult. Luxury is going to be luxury, and this is a very difficult concept and thing to really unpack. I would say that many of these brands are gonna probably think a little bit more about going directly to the consumer, or thinking about their partnerships in a bit more involved way, whether it's e-commerce or thinking about an online digital front and only having a few key partners. But this is just my general take on this subject. It's a very complicated one. I don't have all the answers, but I think it's a lot of different factors involved. I think the rise of social media and what has happened with a crazy surge of an online landscape has made the demand for a product on a worldwide scale be so much that regardless of how these brands operate, it's going to be a challenge to meet it. And if they did meet it, they are making perhaps some compromises for the longevity of their brands. And we're dealing with these types of institutions that all they have at their back is going to be their prestige, their exclusivity in the marketplace. They're gonna protect that at any cost. So a lot of crazy things happening. I'd love to see your guys' comments down below. What is your take on the current supply demand just craziness that is happening in watches today? I'd just love to see comments down below. This is one that's certainly a loaded topic. It's very much involved, but love to see what you guys are thinking. There's a lot to unpack here, and I really wanted to take a very high level perspective on this and really get into the details of what I think is truly happening. But again, I don't think anybody truly knows everything that is going on. Also guys, if you enjoyed content like this, how this is all made possible is through TeddyBaldassarre.com, full authorized dealer of 30 brands, quick and fast fulfillment, dedicated customer support, and full factory warranty for all the brands that we carry. But guys, thank you again so much for watching. Be well, and I will see you all very soon.